Hey, quick question. When you deposit your paycheck into the bank, what do you think happens to it? You probably picture your money sitting safely in wallet, waiting for you to withdraw it, right? Wrong. The truth is, bank takes your money and use it to make themselves rich, lending it out, investing it, charging fees, while paying you almost nothing in return. And the wild part, they can lend out way more than what you actually deposited. This is the hidden system most people never hear about. Fractional reserve banking, and it is how banks create money out of thin air. Stick with me for the next 10 minutes. I'm gonna break it down simply, no finance jargon, and show you exactly how your money is really working for them. What's up, everyone? It is Avas here in January 2026. Rates are finally coming down after years of highs, but banks are still profiting big time. I used to think my bank was just a safe place for my money. Then I learned the real game, and it changed how I look at every deposit and fee. Today, we are exposing the truth how banks use your deposits, how they multiply money, why you get tiny interest while they charge high rates, and the hidden fees that add up. If you have ever wondered why banks seem to win no matter what, this is it. Let's dive in. The big hidden truth starts with something called fractional reserve banking. When you deposit $1,000, the bank does not just lock it away. They keep only a tiny fraction. In the US right now, the required reserve is actually 0% since 2020. Yes, zero, and lend out the rest. Here is how it really works. You deposit like $1,000, bank keeps a small buffer. They lend out $900 plus to someone else for car loan, mortgage, for business loan. That borrower spends the $900, it gets deposited into another bank. That bank lends out most of it again. And this repeat, your $1,000 deposit can create thousands in new loans and the money in the economy. Banks don't lend out your exact money, they create new money through loans. Loans create deposits, not the other way around. That's why the money supply grows. Banks are basically money creators licensed by government, but they pay you maybe 0.01% to 4 to 5% on high yield savings while charging 7 to 20% on loans. That gap, pure profit for them. Now let's break down how banks actually profit from your money. So what they do with it? First, lend it out. Biggest money maker like mortgage, car loans, credit cards. They charge way higher interest than they pay you. For example, you get 4% on a good saving account. They lend at 7% plus on mortgage or 20% plus on credit cards. They pocket the difference. Net interest margin. Number two, invest it in bonds, treasuries, securities. In 2026, with rates shifting, they park money in safe stuff, earning more than your account. Number three, hidden fees everywhere. Overdraft $35 for monthly maintenance, ATM fees, wire transfers, late payments. These are pure profit for like billions yearly. Number four, other sneaky ways like interchange fees when you use debit or credit card on stores pay for paying on by bank, like wealth management fees if you invest through them, even selling your data or cross-selling products. Banks make money because they use your cheap deposit as low cost of funding. You give them stable, low interest money, they turn it into high return loans or investment. That is the totally game. The risk and safety nets. What happens if it goes wrong? But it is not this risky. What if everyone wants their money back? That is called a bank run. And yes, it is happened. Banks only keep a fraction on hand. So if panic hits, they can't pay everyone. That's why we have FDIC insurance up to $250,000 per account. Government backs your money if the bank fails. Central bank also steps in. They can lend to banks or adjust rules. In 2020, they dropped reserve requirements to 0% to keep lending flowing during COVID. The system is designed to work as long as people trust it. But the hidden truth, your money is not sitting there. It is out working hard for the bank. So now let's discuss what this means for you. So, what can you do? Shop for high yield savings or online banks like 4 to 5% possible in 2026. Avoid unnecessary fees, use in network ATMs, set up alerts, understand credit, pay off high interest debt first. Banks love credit card interest. Build your own wealth, invest outside banks if possible, like stocks, index funds, etc. Banks are not evil, they make the economy work by lending, but knowing the game help you win more instead of them taking it all. The hidden truth, banks don't just hold your money, they multiply it, lend it, invest it, and profit massively while you get crumbs. Now you know how the system really works. What shocked you most? Drop in the comments. Fractional reserve or fees? Want a free checklist on beating bank fees? Comment checklist. If this opened your eyes, smash like, subscribe for more money truths, and hit the bell. You have got this. Stop letting banks win by default. See you next time. Bye bye.